We have a very exciting and interesting session lined up for you, and I'm sure we are going to be momentarily getting into the session. As you can see, our facilitator, he's on screen, he's ready and raring to go. But before I hand over to him, um, I'm your host, Jackie Pasley, and I'd like to tell you a little bit about this initiative before we start. So the Catapult program is an initiative that was created or developed through the partnership of Fresh Milk, the Kingston Creative, as well as the American Friends of Jamaica. And they partnered to bring to you this really amazing and exciting opportunity. It's an opportunity for creatives across the Caribbean, and it's really to help creatives to navigate the digital space, as well as learn how to earn an income and to network, and to create a presence for themselves using the digital space. The Digital Creative Training Program is actually one initiative in the Catapult program, and this is where we bring to you several modules in a training session. And today, as I mentioned, we will be looking at how to manage your money. That's a very, very important topic. I mean, money is a scarce commodity in most cases, and so we want to know that we are managing it properly. And so today that will be our focus. We have other very interesting and exciting sessions or courses, and we do in fact still have seats available for some of these sessions. At the end of the training, I will tell you a little bit more about some of the courses. So if you haven't already done so, hopefully I'll whet your appetite enough for you to go over to our website and to register for one of these sessions. Now, you might be wondering, for those of you who would have been joining this session, one of our sessions for the first time, why is it that your mics aren't enabled and so forth? I'm going to share my screen with you and just talk you through what I like to call rules of engagement, and it kind of guides how we are going to be operating for the next 3 hours. All right, so if you bear with me a little bit, I will share my screen with you, and here I will be able to guide you through a few things that are important to the successful running of the session. All right, so let me start by saying that all the mics and the videos have been disabled, with the exception of our facilitator, Mr. Messado, and myself. And this is so that we can have some streamlining around how we manage the session, okay? But you know what? We want to hear your questions. We want to hear your comments. And so we're going to ask that you raise your hand, and if you may want to take a few minutes or a couple of seconds right now to see where those features are on your device. If you raise your hand, put your messages, questions, comments in the chat or in the Q&A feature. We will be able to share those and respond appropriately. All right, so this is how we are going to be communicating. You will use the chat, Q&A feature, or by simply raising your hand. We will take a 10-minute break at approximately 2:45 p.m. And that will allow you to refresh yourselves. We don't want you to go anywhere, so don't go anywhere too fast, or don't step away for too long. We want you to come right back to our session. At the end of the training, there are some things that we want to be able to do. So at the end of this 3-hour session, we want to get to solicit your feedback on this training. We have been delivering this session for about 3 to 4 weeks now, with multiple modules, and we want to get your feedback on some of the things that we are doing all right with, and some of the things that we could possibly improve as we continue in our thrust to improve our delivery of these sessions to you. So the feedback form will be given to you at the end of this 3-hour session. It will come in the form of a link, which I will drop into the chat. And I will tell you when I've dropped it there, so you will know that you can access, so you will see it and you'll be able to access it. It's very important information for us, so we ask you please not to leave until you have completed this feedback form. Equally important is a second link that I will put into the chat, and this form is for you to access a quiz. And the quiz is just so that we can get a sense of your understanding of what was covered today. That too is very important information for us, and so we ask that you complete the quiz at the end of the session. We will at the end of the 3-hour session open up the session to what I like to call a little networking event, right? And this is where the mics and the videos will be enabled. You will be able to speak directly and to be able to engage your facilitator, at least for a short time. I don't know if you will be there for the full hour that we will be opening up this session for. So approximately 1 hour worth of networking is what we anticipate that we will be doing. And so your mics, your videos will be enabled. You will be able to speak directly with the facilitator and also with your fellow attendees. You may very well find that there common interest with yourself and other persons in this session, and it might be a great opportunity for you to reach out to persons in this session. So we ask that you make use of this opportunity as well. It's a wonderful opportunity, and we hope that you will be able to participate. We understand if you have to go, but we do hope that you will be able to participate. Just to mention also that we will be issuing certificates at the end of this training. I want to encourage you to ensure that you do your quiz, because that will determine the type of certificate that you get. So you know, the certificates are really nice to have, and it just solidifies that you did in fact attend this training. And so we hope that you do complete the quiz so that you can get a really nice fancy one that they're all nice and fancy, of course, but that one is a different type of one, right? And then finally, and just as important as everything else that I've mentioned before, I want us to have fun. Nobody says training has to be boring. Our facilitator has a way of engaging the persons in the sessions, and I'm sure that he is going to delight just as he did in his previous sessions. And so with that, all of that out of the way, I'd like to now hand you over to our facilitator, Mr. Gary Messado. He will tell you a little bit about himself before he actually starts. Over to you, Gary.
Good afternoon, everyone. It's my pleasure to be your presenter today. I'm going to go ahead and share my screen, and thank you very much, Jackie, for handing over to me.
No problem.
All right, so. All right, perfect. All right, everyone seeing my slide? You can put something in the chat. I guess Jackie, you can test for me if you're seeing my screen.
Yes, I am, and I'm also responding to some of the messages in the chat as well. But yes, your screen, I am seeing your screen clearly.
Perfect. All right, so we're ready to go. So, as I said earlier, today's topic is managing your money, and I know that that's a topic that everyone is interested in. So, just a little about me. Gary Messado, as was said before, and these are just some of the organizations I've been a part of that have shaped me professionally. So, you know, I'm a chartered accountant in Jamaica, and I have a business by the name of GMA, which we basically exist to strategically partner with small and medium-sized enterprises to provide them with financial accountability, helping them to manage their money, and also compliance services, making sure all is well with, with the various government agencies. And, our goal is really to scale alongside our clients, to facilitate them becoming leaders in their various industries. So if you'd like to follow us on Instagram, you can simply do @GM Accounting, and you can find us there. So we love to work with creatives, and I know that that's who I'm speaking with today. It is fun for accountants to work with creatives because we tend to be strong left brain people. Everything that we do is very scientific and logical. And so, when we work with the creatives, they help to stimulate our right brain, with all of the exciting things that's happening in the creative world. And so it's a great, meeting together, when the accountants and the creatives can come together as we are doing right now in this session. I think it's a recipe for great things to happen. One of the things I'm always mindful of when I'm doing financial training, with creatives, is to try and avoid the accountanese. That's all the accounting language that tends to go over people's heads. So, I some of it is unavoidable as much as I'll try and explain. So, please, use up the, that little section on Zoom at the bottom that says Q&A. Please use it up. Feel free to ask 1 million questions, because I'll be pausing, well, not 1 million, but as they come, we'll be pausing intermittently to take your questions and to really see if we can provide answers. Some of the questions, however, we may have to take offline, if they're a little too technical or detailed. But feel free to ask your questions. So, I want to commend you, for those who are the strong right brainers, for, making the effort to be in this session this afternoon, and to really develop the, money management around your business. And, just to say, Warren Buffett, the great financial investor, he said that accounting is the language of business. And so it is really, really critical, that, we all get comfortable, with some, fundamentals in accounting, because at the end of the day, we want to change the narrative that people have about starving artists. No, we want to say creatives thrive and be able to monetize their talents, and to run successful businesses around the gifts that you have. So I'm really hopeful that this session will help to facilitate that. So we're going to start off with Bookkeeping 101. We're going to look at the what, the why, and the how of bookkeeping. So you're not only getting theory, you're going to get quite a bit of practical this afternoon. So the what. Bookkeeping is keeping records of the financial affairs of a business. And so I have some icons listed there, whether it is the purchases that you have to do, if you are selling a product and you have to buy raw materials. Your operating expenses, we need to make sure you're keeping a record of all of your rent and phone and internet and software and, all of the things that make your business go, travel expenses, etc. And then sales, the part that we're all excited about. We want to make sure that you know how to track your sales properly. Investments, that's the end goal, right? All that profit that you'll be making, how to record where you put it. And the necessary evil of taxes, we need to be able to to record that properly as well. And loans. Sometimes we just have to get some debt equity to keep our businesses going. So really, bookkeeping really is just about how we track all of these different financial aspects of our businesses. So the objectives of bookkeeping are firstly maintaining permanent records. So this is a part that we tend, to not be so good at. You do a transaction and you get a receipt or you get a bill, you pay it, you dash with the bill somewhere, and so, so, bookkeeping allows you to maintain records and with our company registrar offices and tax administration agencies, this is actually a requirement that they have, that if you have a registered organization, that you have a system of keeping records. Bookkeeping also allows you to have details of your financial transactions. I recommend using an accounting software to do this. We'll talk more about that later, but it really allows you just to keep track of all of the little details, the name of your supplier, the description of the product you bought, what was the price, what date you made the transaction. And those little things will help you when you need to reorder something. If you want to follow up on who you sold something to, people who owe you or who you owe. So those details will be very useful. Also, bookkeeping enables you to know the financial position of the business you're running. Plenty of people running business and don't even know whether they're making a profit or not. Um, and so, this is really, really fundamental. Being able to know, are my expenses too high? Am I going way above my budget for the period? Am I living beyond my means? I remember having a friend, and I was helping him with his business, and he recognized that his business could not afford him. He was a burden on his business, and that came out of us, getting him in a structure of bookkeeping, and he had to make some adjustments to how much he was taking out of his business. Um, you may also find out that you have a product that is just not profitable. For those of us who have multiple services or multiple products in our offering, you might find out, boy, this thing that I'm doing, it really is not making sense. So I need to focus on another area of my business. So knowing your financial position, it flows directly into you being able to make sound business decisions. Um, because you may just decide, my prices are way too low. I need to increase my prices, or this is just not going to make sense. So bookkeeping is just really, really important. So we're running into the why of bookkeeping now. So firstly, bookkeeping allows you to manage the money owed to you. Now, this is something I know we're all interested in. For those of us who offer some kind of credit for our services. So you issue an invoice and then you provide a service, and then you say, okay, you can pay me a deposit and you pay me the balance a week after, whatever arrangements you have. Once you start to do quite a bit of transactions, you're going to need some systems to help you so you can monitor who owes you and how long they have owed you for. Managing the money you owe, very important as well. You don't want your electricity, going off on you and your phone lines being disconnected. And so you need to have systems so that you can, keep on top of what your bills are. Managing your inventory. For those of us who have products, proper bookkeeping will allow you to easily know your inventory levels. Do what do you have in stock, um, and so you can know how to reorder and when to reorder. managing your cash flow, very, 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 very important. By tracking your bookkeeping, you will know the cash needs of your business so you can set a realistic budget. Particularly those of us who provide services on credit, not because you made a sale means you have the cash, because you're still waiting to collect. So it helps you to really stay on top of, okay, what are my anticipated expenses and how much cash do I need? Required for tax compliance. So many times people end up paying more taxes than they need to because they haven't properly tracked their expenses. Sometimes I work with people, and when we've done the numbers properly and they find out their tax liability, they're like, wow, Gary, you're a magician. I said, no, it's just that we made sure that we captured all of the expenses you incurred in the earning of your income. And so yeah, at the end of the day, you really didn't have much profit to be taxed on. Because if you kind of just, say, boy, you do a little slapdash thing and you go to the tax office and you say, I'm trying to pay some taxes, and you just go there telling them, oh, boy, I made X amount of money in sales. They're not going to do the hard work of figuring out what the expenses are. They're just going to slap that percentage on the income and tell you this big amount of money you need to pay. So again, proper bookkeeping allows you to be ready to give Caesar what he is due. Financial planning. Um, so really, you know, planning is greatly helped by having historical financial information. As the saying goes, if you don't know your history, then you won't know your future. I don't know if that's a direct quote. I need to go. I need to find that quote. I know there's a proper quote, right, related to knowing your history, but you get the point. When you do proper bookkeeping, you have good historical information that can facilitate you doing excellent planning, knowing boy, I want to be able to increase my sales. I want to hire some more people to execute on what I need to do, which means I'm going to need more capital to invest in my business. So you can know, okay, what are my capital needs? So you can do some good planning. Monitoring your financial performance. The beautiful thing about these cloud accounting softwares available um, now is, once you do good bookkeeping, you can literally, at the click of a button, get beautiful reports, profit and loss statements, balance sheets, cash flow statements, all of those statements I'm going to explain a little later in the presentation. But as we spoke about in the objectives earlier, once you know your position, your performance, that flows right into your decision making, right? So if you need to discontinue a product, or if you need to get more, if you realize, people in this market tend to really gravitate to my product, then I need to focus on that market, with the products I'm selling. So that's a beautiful thing about reporting. Knowing how you've performed, you can make great decisions about how to become more profitable. And then it facilitates your external financial relationships. And folks would know, if you need to open a business bank account, they want financial projections. If it is that you want to apply for a grant, they want financial statements. Once it is that you're trying to engage with, folks externally around your business, whether it be the bank, whether it be investors, whether it be, grant facilities, they want to see financial reports coming out of your organization. So without solid bookkeeping, you just will not be able to provide that. And then overall, it improves the professionalism of your business. When you can provide an invoice to your customer, and when they pay you, you can provide them with a receipt. If you do several transactions with somebody and they're trying to figure out, okay, how much I owe, and you can produce a statement, that encourages transparency and people will want to engage businesses like that, and so that will even improve the quality of the clientele that you have. You can get some better paying customers, right? Now we get into the how, the part everybody wants to know about. All right, so how do I do great bookkeeping, Gary? So I've developed this system of um, bookkeeping, really, just over my years of trying to improve the quality of service I provide to my clients. I've found these steps really, really helpful. And so it's gathering, organizing, analyzing, posting, and reporting. So this is kind of beginning to end of the bookkeeping process. Now, as I have partnered with clients of varying sizes over the years, I've recognized that some people are totally, what should I say, um, against getting into all of this. They just hate it, and they're just like, Gary, do everything for me, please. And so they tend to outsource as much of it as possible, which is fine, right? That's why accountants exist, so that people who just don't want to have anything to do with these things don't have to. But it's good to understand anyway. But I have some clients who are like, okay, I will do this part. I'm comfortable with this part, but please, you get involved, at this point in the process, which is fine. But the idea is it's good for you to know, because um, somewhere along the spectrum, you will likely need to be involved, in a, even if it's a small way, in the bookkeeping process of what you're doing as a business. And the reality is, when you're starting off as a solopreneur, many times you just don't want to deal with the added expense of having to pay somebody to do your accounting. You're like, you're just trying to get something off the ground. So you inevitably just have to do it until you can outsource it. So, pay keen attention. So you only need to call in the accountant when your money gets big. All right, bookkeeping hacks. So before we get into the nitty-gritty of the gathering and the organizing and analyzing, I wanted to just give you some hacks to help you in your bookkeeping process. So first thing I want to say is, bookkeeping needs to become a lifestyle. And, it's funny that we don't realize just in our regular everyday life how much we engage with the bookkeeping process. For example, say you wake up in the morning, realize you need some gas in your car. You have to go to a client meeting. On your way to the client meeting, you decide to stop at a gas station. No, what some people do is they just use their cash, pay for the gas, and they're gone, not realizing that a trip to a client meeting is a tax deductible expense. And so really they should have gotten some evidence of that transaction, because that can be logged as a travel expense, a business travel expense. Now, what I would recommend, as you see the point below, making it a lifestyle, is avoiding cash, right? So if you use your credit card, then you would have had a log of that expense, which is perfect. Um, but if you do use cash, you can actually ask the gas station for a receipt, and they would provide you with one. So again, that's just something that you do on a regular basis, right? Getting gas. Now you're meeting a client at a cafe for breakfast, and here it is. You pay for your meal, um, get a receipt. Now, what people tend to do is just throw away these receipts. But again, it was a client meeting, so that now becomes a tax deductible expense. You leave there and you drive now to some corporate office, and you had to use some public parking lot that you have to pay a parking fee. Many times we just use our cash and we don't even think about getting a receipt. But again, tax deductible expense. I think you get the point, right? Just in your daily lifestyle, moving around, you are doing, you know, transactions that would serve you well to track that expense, because all of these things, they add up. At the end of the year, you realize it's thousands of dollars that you've spent on these little minor expenses, which become great tax deductibles, reducing your taxable profit. Um, and so the idea I'm making is we just need to be mindful as we do our day-to-day activities of the financial implications, and that some of them are relevant business transactions that we need to keep a track of. Um, so that was hack one, making it a lifestyle. Hack two, setting up a bank account strictly for business purposes. One of the mistakes often made is that people run their personal lives and their businesses through one bank account. That's an accounting nightmare. But I know the challenge sometimes with opening a business bank account, and so people are just like, I can't be bothered. But what I recommend in those circumstances, that it's best you just open, another personal bank account and dedicate that personal bank account to your business activity until you can be bothered with getting an actual business bank account. And similarly with stuff like credit cards, you could dedicate a credit card to your business activity, and get another credit card that you would use for personal. But the idea is that when you separate your business from your personal, it becomes a beautiful way of being able to just track all of your expenses, and you can say, yes, everything in this account relates to business. I mean, sure, you're going to, you may mess up every now and again, but you can say, for the most part, all of your bank statements, credit card statements, those relate to my business activity. Getting online banking. With COVID, those who were against it and had security concerns are now, moving towards getting online banking. And I know that the security risks are real. And so that's something that we would each have to, measure the kind of risks we're willing to take. But I'm a millennial, so I really don't know anything else but doing everything online. So these risks have become normal for me. But the beautiful thing about online banking is that you can download at any point in time, your financial activity. So, I just love how readily accessible your financial information is, rather than having to wait on an email with a credit card statement. I can literally go online and just download in a spreadsheet format, my business activity, which is just great. Not to mention, the ease of tracking whether I have been paid, right? So, nowadays, I mean, well, 99% of my clients pay me through bank transfers, which I love, because when I get a check, I have to wait like 10 years. I mean, no, but like 4 days for the money to clear. But and then, it has to be physically lodged in a bank account. Who wants to do that? I can just get paid without having to go collect a check or go to a bank. It's beautiful. But then I can see that the money has hit my account. And then similarly, when I'm making payments, I can do a bank transfer. So it really eases your bookkeeping, that you can receive payments and make payments, right there through your bank account, avoiding cash, etc. Avoiding cash. Fourth hack. Now, the thing about cash is it's the easiest way to not know where your money went when you're when you're spending cash. Again, if you do your bank transfer, you have a wonderful record. Credit card, debit card, you have a record. Yeah, but cash, you could do a ATM withdrawal, and And then on your bank statement, you just see this lump sum of money withdrawn. And maybe you remember one thing you did with it, but you're like, I don't know where the money went. So avoiding cash is the ideal. However, there just sometimes cash is unavoidable. And a little later in the presentation, we're going to go through a petty cash system. Next hack is using a digital accounting application. Um, we live in wonderful times where there are so many options in regard to this. But as I said earlier, all of the reasons why we do bookkeeping, um, using a cloud-based accounting application just makes it super easy. You can, even cloud for a cloud-based one, I mean, which is what I'd recommend. Even if your computer is stolen, the information is sitting there in a cloud. You can access it from any computer. If you're collaborating with an accountant, they can access it from wherever they are. But it just allows you to, they're quite intuitive and user-friendly, which you will see as we do some practical steps on some. Digitizing all documentation related to financial transactions. Um, we are in the age now of smartphones. So, a while ago, I just bought some lunch and I got this lovely receipt. No, I can throw this away because immediately what I did was I used an expense management software, snapped a picture of the receipt, and it's now wonderfully digitized. If you don't want to go as fancy with an expense management software, you can just use a scanning app, Cam Scanner, Scannable. There are a ton of them. If you go in the App Store and search for Scanner, you'll see a bunch of them, free ones. And yeah, that allows you to digitize that documentation because these receipts fade, So if you're trying to keep this paper and you don't do your bookkeeping right away, you wait like a month or two, you look back at it and you can't even see what it was. So that's my recommendation. All of your financial information, you're able to quickly, you're able to store them. So let's go through these bookkeeping steps, and then after that we'll take a little pause to answer questions. So please, be populating the Q&A, and we'll soon take some questions. So step one in the bookkeeping process is gathering. Very important. So you won't have anything to record if you don't first gather the information, right? And so you really want to ensure that you're gathering all of the primary documentation related to your financial transactions. So supplier bills, or if, some places you just get a receipt, you want to be gathering that. Invoices that you issue to your clients. It cannot be that you provided somebody with an invoice and you don't have a copy of that invoice or can't find that invoice, right? And then when they pay you, you should have prepared a receipt so that that now becomes evidence of the fact that you have collected the money. Yeah. Bank statements, very, very important financial document that you need to ensure you have, neatly gathered. Credit card statements, and any other information. I mean, could be a credit note, could be a contract, any kind of documentation which speaks to the nature of a financial transaction. You want to make sure that you've gathered those documents. Now, you see at the bottom there, I have my little orange bulb. And so those are just some little hacks that I've, wanted to highlight. So in step one of gathering, as I mentioned earlier, we want to be digitizing all the paper documents so that we don't misplace them or they don't fade. A neat little tool that I always use is setting up an email for all financial information. So basically that email becomes a little repository of information. And the beautiful thing, I love the Google platform. You can go in there and just search, the detail advanced searches. You can label your emails, and so just it really helps with just keeping track of information. I recommend to my clients, people who email you bills, that you give them that email address that you've dedicated to your accounting, um, to email all your bills to. So your light bill, your water bill, your cell phone bill, all of these recurring bills, if you have software subscriptions, that all of them just flow right into that email that you have designated strictly for accounting. And if you're working with an accountant, you just give them access to that email so they can pull the stuff. Using an expense management application. So we'll talk some more about that. Um, I love my expense management application. Cloud storage application. And I'm going to give you examples of all of these not long from now. So that's gathering. Having gathered the information, you now need to organize it, right? These are very simple steps, but I'm spelling them out so that we can really be intentional, about following these steps to ensure that we have really good bookkeeping. So all this documentation that you've gathered, you now need to put it in an orderly manner. I love to use varying folders. So I will have a folder for the year. So I'll have a 2020 folder. Then and this is digital organizing I'm talking about, right? So I'll have a folder for 2020. Now within 2020, I'm going to have another folder for the month. So I'm going to have a January, February, March. Then within that month, I'm now going to have a folder for money received, for my invoices and receipts. I'm going to have one for money spent, for my bills and expense receipts. I'm going to have one for statements, for my bank statements and my credit card statements, etc. So I'm keeping everything wonderfully organized. And you see down in the hack section, I speak about using labels on your email, right? So you can label your emails, light bill, water bill, whatever, the names of your suppliers, the names of your customers, so that when it comes time for you to search through your email, it becomes this really user-friendly archive of all this information. Within an expense management application, you can create reports. You can organize them the same way. You can have a report for each month. You decide, how the organization best suits you. But having gathered the information, you need to organize it so that the information becomes really user friendly. You don't have a bunch of information that you just don't know where to find anything. Having organized it, your next step in the process would be to analyze it, right? So I typically use my statements when I'm doing my analyzing. So I would get my bank statement in a spreadsheet format, my credit card statement in a spreadsheet format. And so I really love, when online banking facilitates you being able to download your transaction listings in a spreadsheet. Because what I do, when I have it in a spreadsheet, I can just create some columns to the side. And within that column, I would have customer/supplier, right? So I can be able to write within that column which supplier I had paid, which customer had paid me. So I know what's happening in my bank account and my credit card account. And the truth is, it's really important that we do that, right? We can catch if the bank is overcharging us. We can catch any irregularities, really. And so, it's very important that we review our statements, because the banks are not, you know, what's the term? They're not infallible. They too make mistakes. But even beyond just catching irregularities, it allows you to know where your money went, and having analyzed it now, um, you are now reach the step now where you can post. So a really cool feature, if it is that you're located in North America, is you can connect a US bank account with your accounting software. And so it will automatically populate all of the transactions in your bank account in the software. Unfortunately, where I'm located in Jamaica, the Jamaican bank accounts are unable at this time to connect with with cloud accounting software, and so we would have to manually upload our transactions, which is possible to upload them. Or some people may not bother with uploading the transactions; they may just go ahead and just post them, instead of uploading them. So posting. Now there are two types of methodologies in posting. You have the cash method and you have the accrual method. Now the cash method is when you post transactions only when money has exchanged hands. The accrual method is when you record a transaction based on when the income is earned or when a bill has been generated. So let me give you an example of that. Let us say you are um, selling at a craft market. Yeah, you're selling your craft item at a craft market, and when someone comes, you don't give them the product unless they have the cash to give you. So now that would be a cash transaction. However, let's say somebody commissioned you to paint some artwork. Now, if you are commissioned to pay some artwork, I would hope that you get a deposit at least upfront, right? And so you would have issued an invoice, for this work of art that you're going to do. But the reality is you have not been paid the full amount as yet. And so you've recorded an invoice indicating that you've earned this money, but you have not yet been paid. And so that timing difference between the issuing of the invoice and the payment, that's what you regard as an accrual method of accounting, versus when you get paid upon delivering the service or the product, that would be a cash method of accounting. So you would have to determine by the nature of the service or product you offer, is there a timing difference between when you issue an invoice and get paid, or do you not provide a product or service unless you get payment? So that would be the distinction between accrual and cash. Now, again, when it comes on to this posting, I'm recommending using a cloud accounting software, and we'll get into the various options shortly. And the beautiful thing is you can prepare wonderful invoices through this software, right? And what's really cool is that you can email somebody the invoice directly through the software as well. And then when you get paid, you can similarly email the receipt right from the software. So I just find it, just so easy to use, and really just facilitates communicating between yourself and your customers so effortlessly. And then of course, the posting there, it doesn't require any fancy accounting knowledge. You're literally creating an invoice. You literally are just, recording a receipt, as we'll see. And then now, when you're recording other transactions, what I recommend is that you use that analyzed bank statement and credit card statement. So that way, when you're posting, you actually know the date that the transaction occurred. You've analyzed it, so you know who you paid. You should have your receipt available to you, even if it, digitally, that you can look and you can say, okay, this is what I paid for. So you can put all of that detail, within your posting. Now, what I love about QuickBooks, I'll expose my hand. That's my favorite, one of the softwares, but there are other great ones too, is you can actually upload, in your posting, your receipt that you got. So you can actually have evidence of that transaction stored within the software, which I just think is really, really cool. Just as if you want to ever get your business audited, that's the level of scrutiny. Anybody puts you under some serious scrutiny if you've been actually storing those documents within your postings. Is your information becomes ironclad, because now you can show them all the support as to why you have this income, why you have that expense. So again, we're going to walk through some postings so you'll be able to see this practically. And so the hacks I have there, again, if you use an expense management software, what's really brilliant is you can actually just sync that software with your accounting software, and it automatically posts the transaction. Um, yeah, and then another really important part of ensuring that you do proper posting in an accounting software is having the right chart of accounts. So the chart of accounts really is listing all the different categories that your transaction should be posted to. And that's something that you may decide, you want to hire an accountant to do, so that you can, really maximize the software. Because if you don't have the things properly categorized, then you probably don't end up with such a great outcome in your reporting. So the final step in the bookkeeping process is reporting. As I said earlier, if you're using an accounting software and you've done the right bookkeeping, at the click of a button, you can generate a profit and loss statement, balance sheet. You can know your accounts receivable, that's the people who owe you. You can do an age report to see the timeline, so how long they've owed you. You can create an accounts payable report. You can see your income by customer. You can see your income by product, what did you sell, the different types of your products, what sold more or less. Um, and my recommendation is that you would be, producing these reports on a monthly basis, so you can know how your business is performing. And then you can make some good business decisions. So I will pause right here um, to see if we have any questions to answer before we get into bookkeeping 102. And as you can see in 102, we're going to be looking at various accounting applications and systems, and we're going to do some practicals.
Okay, so yes, Gary, so we have a few questions in the Q&A and some comments and a few questions in chat. I'm going to take the questions in the Q&A first, since they pertain specifically to posting. Lesan, hope I'm pronouncing that correctly, says, I'm not really clear about what you mean by posting. Posting where, she's asking. Is it to the overview? And then Leslie Ann also has a question around posting, which is, what is the definition of posting?
Okay, so by posting, what I mean is when you actually record the transaction in the accounting software, or the again, I'm talking about software, but if you're doing it manually, um, as my dad had to do, when he was an accountant coming up 40 years ago, where he would record his transaction in a ledger, physical ledger book. So whether you're doing it, physically in a book or digitally in software, posting is the actual recording, the recording of an invoice and the receipt against that invoice, the recording of a bill that you receive from your supplier, and the payment of that bill. So those are examples of postings. But have no fear, we're actually going to do some posting in QuickBooks, and I'm going to share the screen as we do that.
Okay, great. So a little bit more on that for persons who might not be really clear on what's happening there. Okay, moving over to the chat, and I hope I pronounced this correctly. It's Adzico as more of a comment. He says, nice aiming for no starving artist around here. So this might have been a comment to a point you made earlier.
Right.
Floyd says, if you don't know where you are coming from, you will not know where you are going. Gary, I think that's the quote. So it might
Right.
have
I
been
was
making
trying
reference
to,
to a quote
yeah.
you made earlier.
Or trying to make.
Or trying to make, right,
Yes.
right.
I'm making a note, Floyd. Thank you.
Right. So let me repeat it so you have it correctly, Gary. It is, if you don't know where you are coming from, you will not
Yes.
know where you are going. Okay.
Yes.
Daniel says the Notes app on the iPhone can also scan documents. So
Very
a
true.
point there around that. And then Kevin, who was in our session yesterday and quite active in the session. He's here with us today again. Welcome again, Kevin. Trinidad, he says Trinidad is sadly far behind in every respect of banking.
Okay. Yes, I am sorry to hear that, Kevin. I hope you can at least pull, you know, a CSV file from your online banking, which you can then open as a spreadsheet format. Um, yeah, because I hate when I can't do that. Right.
Right. Okay. And Leslie Ann just wants to thank you for the clarification you made on posting. I'm actually seeing 2 or 3 more questions here or comments in the Q&A, so I'm going to take them. This one is from an anonymous attendee who says, in QuickBooks, do journal entries adjust the bank account, or do you also have to enter bank transactions differently? Journal entries like additions to owner's entry through transfer from personal bank account to business bank account, drawings too.
Yes, so in QuickBooks, you can definitely do journal entries. QuickBooks is quite robust, so you would be able to do all gamut of journals, and when you upload your bank statements, it doesn't prevent you from doing journals, and you don't have to upload your bank statements. You could actually just journalize all of them if you wanted to. It's just if you uploaded them, it makes it a little easier. And even if you do upload it, you can actually just match it to a journal so that you don't end up duplicating the journal that you did. I mean, it can get a little bit more advanced, where when you do an upload of your bank transactions, it really serves to help you with a bank reconciliation. But that would be bookkeeping 202, right? We're not covering 202 in this in this course.
Okay. All right. So Claudia is asking, could you please go over reporting for me, especially its uses and some examples. And Marcia has a point here as well on reporting. She's asking if you could please show the reporting slide again.
Well, I would tell you, Claudia and Marcia, even better than that, we're going to spend some time looking at some reports, and I will discuss a little about how we read those reports and benefit from them. So that is in section 103, bookkeeping 103. So hang tight. We soon go dive deep into reporting.
Okay, great. Now I'm seeing 3 additional questions here in the chat. Can we take them now, Gary, or would you prefer to continue and add some?
Oh, yeah, because I figured they're related to what we discussed already, so we can
Yes.
touch on them.
Yes, but this is a point on a question on reporting. Will this slide on reporting be forwarded along with the other slides to participants? I missed the last slide.
And I figured that you're going to send these recordings, right, Jackie?
Yes, so what
Yeah.
will happen, just for the benefit of everyone in this session, a link will be provided. This will be shared by email to all attendees today on how to access the recordings. This will not happen before another week or so, but you will be able to view the session if you are an attendee today. All right. Moving on, Kevin, to be honest, not sure what that is.
I think it's about banking.
Right. Are so unreliable. I'm not sure what that term is. HTEY are so are so unreliable. I do
They
not
are so
trust.
unreliable.
Oh,
Yeah.
it's they are
Yeah.
okay. Okay. I don't trust their online banking. I'm in the process of attempting to set up something US based to bypass the local system entirely. Such is the sad state of Trinidad banks, says Kevin.
Okay.
And moving on to Daniel's note, I would like to remain okay.
Yeah. So it's just comments
Um,
about the Trinidad banking.
right,
Yeah,
right,
yeah,
right, right,
yeah.
right. And of course, there's a thank you from Miss Winter.
Mhm.
One last note. Or it's a question rather from Kamisha. Does does a basic QuickBook Online offer multiple businesses or child businesses? I am thinking us creatives can pool resources and purchase a plan, but have their own business books.
Yeah. The truth is, Kamisha, you can you can even get free accounting software. So QuickBooks is great, but if you really don't want to have to incur that administrative costs because you're not doing a lot of transactions, there are some free options that I'm going to cover right now. Um, and truth is, if you do want to use QuickBooks, they have different levels that are quite affordable. So let's jump into applications.
All right, so can I just make one last comment here? And this is from an anonymous person who just wants to make a comment on the point about Trinidad banks, right? And this is to say that it really depends on the bank that you're with. Some banks are ahead of others. All right?
Mm-hmm.
Okay.
Sure.
Okay, over to you, Gary.
All right. So on the matter of applications, so you would have heard me talk about recommending accounting software, expense management, and cloud storage to facilitating efficiency in the accounting process. So I want to give you examples of all of these. So accounting software. So these are some of the popular, leading softwares out there. And again, these are for small and I would say medium size entities, because once you get into large organizations, they tend to use some far more sophisticated software. Zero is excellent. QuickBooks as well. QuickBooks has been around the longest, so they're the most dominant in terms of the softwares in the market. Um, and just because they're so dominant, that's why I've kind of just become an expert in that space. FreshBooks is another good one, very easy to use as well. Wave Apps is the one that tends to be the go-to for most people because Wave Apps is actually free, and it's quite decent. I mean, I get frustrated with some of the reporting um, capability of it, but the truth is, for a free software, it really is wonderful. Um, so that's accounting softwares, and we're going to spend some time in QuickBooks shortly. Now, Expense management. These are two popular ones, Expensify and Zoho Expense. What I mean by expense management, as people may not be so familiar with that application type. Basically, I'm an expert in Expensify, which is the more popular one than Zoho. What's really lovely about Expensify is you know, it's an app that you put on your phone, and you literally can take a picture of a receipt, and it scans the receipt automatically, and it populates for you the name of the supplier related to that purchase. It populates the date, and it populates the amount. And so all you have to do is you just need to go in and you know, choose, you know, what category of expense it relates to. But you can even set up rules that once it's a certain supplier, then it will automatically select a specific category when it's a transaction related to that supplier. So just really intuitive, but it makes the gathering and the organizing of your information super easy, because you know how it is. When you buy something and you have a receipt and you end up with ladies that have a handbag full of receipts, or gentlemen have a pocket or wallet full of receipts. Like, you know, I know we all hate having to have that paper accumulating. When you snap a picture of the receipt, you'll just throw it right away and forget about it. And it's $5 for the cheapest package of Expensify, and I think it's so worth it. They have free versions, but I think they limit the amount of pictures you can take of the receipt. I think the free version is like 10 pictures. And I don't think, and then, you know, you are not able to sync the software with your accounting software on the free version, I believe. But for the, you know, just for the $5 version, you can snap all the pictures you want, and then you can organize them into reports, and then you just sync that report with QuickBooks, for example, and then it will then post those receipts into QuickBooks. And I love it stores the image of the receipt within your QuickBooks. I just think it's brilliant. I love it. And then cloud storage. Again, no, when you do the scanning of, you know, contracts or whatever, you know, bills that were emailed, whatever it is, you want to keep your digital copy of these things. You can use one of these. You can use Google Drive, which is once you set up an email on the Google platform, you automatically have access to Google Drive. And I'm gonna just, you know, show you that really quickly. I love Google Drive, that's the one I use. Dropbox, I use it as well as a backup to my Google Drive. And then there's OneDrive. Once you're a Microsoft user, I think you have free access to OneDrive. But all of them, you know, useful cloud storage devices. I like Google Drive because I use Google Email, and so it's just really seamless working between the email and the drive. Now, here I was going to get into petty cash systems and double entry system, but I want to actually pause and actually use some of the software right now. So let me go to my QuickBooks. Alrighty. I just got logged out of my QuickBooks. I'm just going to log in, and then I will share my screen again. Here we go. All right, so are we seeing my QuickBooks screen? You can just give me a comment in the webinar chat, or Jackie, you can tell me. All right, perfect. So we're now in QuickBooks. You'll notice at the top it's telling me to subscribe. That's because I'm using a trial version for training purposes. So you log into QuickBooks and this is what it looks like. Yeah. This is essentially your dashboard, as you can see to the left-hand side. It says dashboard there. And I like this, it's really cool. So you can get an overview of your income, expenses, profit. You can see your bank accounts, what's the balance in them. You can see your sales here below. Really neat. Below dashboard, you'd see it says banking, where you can, see your bank accounts listed. This isn't set up. Again, remember how I was saying you could connect a bank account if you're in the USA. Otherwise, you'd have to click the upload transactions to bring your transactions in. Expenses, this shows you all of your expenses. Notice under here, you have a little tab that says suppliers. So you can actually see, your various suppliers. Under expenses, you have sales. Here, all sales, you have a list of all the transactions that have been done. Or you can look at it from a customer's view. You can see who your customers are, the products and services, and you can see the type of services you have set up. Down here, you have employees. You can add that in. You have reports. Now on reports, you have, where you can select all kind of different reports, accounts receivable, aging, balance sheet, profit and loss, different kinds of balance sheets, different kind of profit and loss reports, statements of cash flow. Again, you can see various reports under who owes you, seeing who you sold to and what they owe. You have your sales and customers. You can look at your sales, in a variety of ways. You can see who you owe, accounts payable. So, just loving it. Love QuickBooks, love all of the different kind of reports. You can look at employees, you have a little section for your accountant, all the fancy reports that accountants love. Then you have a section on taxes. I'm not sure if Trinidad has a value added tax like Jamaica, where we have what we call our GCT, where you can set that all up in here and add GCT on your invoices, etc., and track that. And you have an accounting section down here with your chart of accounts, which is what I said you should, get some help from an accountant to set this up properly. It comes preloaded, but it would need some customizing for your respective business. So anyway, going back to the dashboard. Now, at the top left-hand here, you have this plus new. Let's bring this over here. Now, with this plus new, this is where you would go to every time you want to do a new transaction. So you click on there, and you see it has these different headings. So you have customers, suppliers, employees, and other. So let's tackle the customer section. Remember how I spoke with you earlier about two types of postings, whether you want to do accrual or cash. Now, accrual was where there was a timing difference between you earning your income and you getting paid, versus cash, where the moment you provide the service, or I'm seeing something come up. Shared screen frozen. Okay, let me stop it and reshare. All right. Okay, I think we're good now. You can let me know.
Yeah, it's not frozen for me, but let's see what the comments are in the chat, if there are any. Not yet.
Okay. Let's say no news is good news.
Yes.
Okay.
Unfrozen now. Okay, so I believe you're good to go, Gary.
Great. Right. So I was saying, when you provide your service or your product and you get cash right away, that would be, the cash method of accounting. So let's start off with the accrual method, right? So with the accrual method, you would actually use invoice. I think I clicked on that a little too fast. Let me go again. So under customers, here you have invoice. So we click invoice. And again, it's like super intuitive, right? You come up here, you put in your customer name. I had already created Jackie as my customer. So literally type it in here, but as you can see, I have her already. So I click it. And I've, I populated it already with an email. And you'll see why that email comes in really handy to ensure you populate an email in. And here, see billing address, terms, no, that would be, based on, the amount of credit you're going to give your customer. I'm being very nice to Jackie and I'm giving her 30 days credit. So the invoice date is today's date, but she doesn't have to pay me until the 13th of November. And then here, well, to the right, you would see that it automatically populated an invoice number, which is good because, we want to have sequencing in our invoicing. And then here now, we would create a product or a service. So if you click this down arrow, you would see that, it has already been, one has already been created, managing your money. But let's, for the sake of this training, create a new one. So I'm going to add a new one. And I could add an inventory item or a non-inventory. So you say by non-inventory, it would be something that you don't want to track quantities of. The example I use is nuts and bolts, where you wouldn't want to track, how much nuts, how much bolts. Or you can choose a service, or you can choose a bundle where you put multiple things together. I'm just going to choose a service. And I'm doing it from the point of view of an accountant, right? So I'm going to say tax preparation is a service I'm providing. I can choose a category. So you see before I had a category for training. This category now is going to be tax consultancy. All right. And then now I can choose over here. I can put in a description of this particular thing. I can, put tax preparation services. And then I can come under here and put a price. So I'm gonna put 1,000 and then income account. This would be based on my chart of accounts that I would have created. So I can choose different types of income accounts. So for the sake of this training, I'm going to create a new income account. So you see account type, income, detail type. So I would choose, is this retail, wholesale? In this case, it's service fee income. And I want to create an account for tax services income. All right, save and close. And now I haven't enabled account numbers or anything, but you're able to have account numbers and all of that if you enable that feature. So save and close. So here you see my service come up, tax preparation, beautiful. You see my rate there, $1,000. And then here I could put a lovely little message on my invoice for my customers, which all of that can be, done in settings and be pre-populated. If there's some attachment that I'd like to put in here, I could attach that in. So let's take a look and see what this invoice looks like. So I'll come to the bottom here, print or preview. All right, and here's my invoice. My name of my company is GMA Training. And here I have an invoice to Jackie Pasley. And, it comes up, shows you my invoice number, date, credit terms. Just really nice, clean invoice. If I had a message would come up here. My banking information, all of that could come up here. And then I could choose if I want to download if I wanted to download this invoice, I could. And again, this is just basic, yeah? There's a lot more that could go on here. You could put your logo on it, message to customers, all of that can be done in your settings. You can really customize your invoice. There are different formats you could choose. Doesn't have to look this way. You could choose different colors. Um, you can do quite a bit of editing. And then you could download this in a PDF version if you like. So I'm going to actually download this. All right, I'm going to download it to my desktop. All right, so this is invoice for Jackie Pasley, invoice 1003. Perfect. And I'm going to put that in my cloud storage after for us to refer to. Now, here's this really cool feature that I love. So rather than I just downloaded it in PDF and I could have manually emailed it to her, or I could have, printed it and give it to her in person. Or I could come to the bottom right hand here and click Save and Send. And in my Save and Send, I can now send it directly through the software. This is a pre-populated message that I could edit so that I have my own customized message. But this is the one that's in there currently. Dear Jackie Pasley, here's your invoice. We appreciate your prompt payment. So this one just goes straight to the point, right? And so this is to the right, it's showing you a preview of what Jackie would say. So she'd say GMA training, name of my business. And then she would say the due date, she'd say the amount, and then she sees the detail. And so it's all in there. So we just to send and close, and the email has now been sent to Jackie. Yeah. Now look at this. My income here, before it was $5, you see it's now increased to 1,005. It's my profit increase as well. Yeah. So that's recording the invoice. Now, the income has been earned, but I haven't been paid as yet. So Jackie receives my invoice now, and Jackie's like, all right, I know Gary is so nice. He has given me 30 days credit, but I want to pay Gary, some money now. So Jackie paid me $500. So I want to record this. So I go to my new at the top left hand. Then I'm going to go under customers to receive payment. Go to receive payment. Put in Jackie's name. Yeah. And Jackie paid me same time she got it. So today's date is there as a payment date. Payment method, I would choose, okay, how did Jackie pay me? Jackie paid me by bank transfer, cash, check, credit card, what? So I'm going to put bank transfer. Then I can put the reference number of what came up when I refer to my online banking. And then I would choose where did the money go to, which account. So I had this one already set up, People's Bank Savings. So I'm just going to stick to that. That's where she transferred the money to, my People's Bank saving account. Again, she paid me half the money. So I'm going to put money received to the right here, 500. Now, you will notice that there are two invoices outstanding. So you see the section says outstanding transactions. So there was an earlier one on the 30th of September, and Jackie she owed me $5 on that one, but it looked like she did forget to pay me, right? So I'm going to say, well, let me apply that $5 to this payment. So you see it here, payment $5. Then now I'm going to apply the balance now to the second invoice. So I tick it down here. But you saw what it did was it automatically put in the full 1,000. But I'm going to adjust that because it wouldn't be the full 1,000. It would have been 450. No, sorry, 455, right? Is this making sense? Okay. So, no, I'm not. Can you believe it? I'm an accountant and can't do the maths. So it would be $495. All right, there we go. So they say amount to apply 500. Okay. Um, so here in the attachment section, suppose I wanted to add, a printout of or a screenshot of the transaction in my bank account. I could have done that and attached it here, just for completeness, just for my own sake. I could have done that. So yeah, this is completed now. So the bottom right hand side, I could just save and close and come out, um, or save and new to do a new one. But I actually wanted to save and send because I want to send Jackie a receipt. So you see the subject here, payment receipt from GMA training, and it said this pre-populated message, please find our payment receipt attached. And then here it is, it's showing you the receipt that would be sent to Jackie. Yeah, so it shows you the invoice date and the amounts related to each invoice. You click send and close, and voila, email sent to Jackie. So wonderful. So we've done an invoice and we've recorded. So look here under your income section, it shows you that you only have $505 of open invoices remaining. Yeah. And it shows you what was paid. I was paid $555 over the last 30 days. All right, so let's move on now. So we've done an invoice, we've received payment against it. We could do an estimate. Um, so the estimate is if we wanted to do a proposal. Somebody wants to know, okay, how much would your services cost? So let's say I'm choosing a name from this group here. Lisan Charles wants an estimate of a training. Yeah. I'm just going to use the standard email that we've been using. No, we're good. No disconnection. Yeah. All right. So I'm doing an estimate here. Yeah. So let's say you wanted some training services. You wanted me to do, I'm managing your money training for you. And I'm so reasonable. I'm just $10, right? And so this is your estimate. So, we can do a print, preview. So this is telling us here, this is showing us here an estimate. So as you can see, it says estimate. And, just really cool. You could download it as, here, clicking the download button. I'll just change this. Estimate 1001. That was for Charles. Again, you could do the save and send feature and just send your estimate, just like how you send an invoice. So, just cool little features. You could do a credit note, but I want to jump down to sales receipt under customers. So we would do a sales receipt where we receive cash upon doing the transaction. So again, where it is that upon the delivery of our service or the exchange of goods, we receive cash immediately on that transaction. That would be the cash accounting method. Now, in that case, we wouldn't use the invoice and then receive payment method. We could just go straight to what we're on now, a sales receipt. Yeah. So in the sales receipt, you will notice it looks just like the invoice. I'm going to use Lisan Charles here. I'm going to stick with this same email that we've been using. Of course, you would put in your customer's email, right? sales receipt date, I just put today, but let's say payment method was cash, right? Instead of bank transfer. Um, Deposit account, I'm going to say that I'm depositing this into my petty cash. I'm creating a petty cash here because I got this cash, right? So that's where I'm depositing it to. Now I want to put the service. So let's say, here I'm doing tax preparation, $1,000. Good. Um, and I want to send off this receipt. So here's the thing now. When you're using the sales receipt, in the sales receipt, really what they have done is that they have combined the invoice aspect of things that we did before and the receive payment. So they brought them together. So you can actually show how you are being paid and you're showing the service you're providing in the one location. So that's the difference between the sales receipt and the invoice. It's just that in the sales receipt, it's bringing together the payment and the service information. So here's an example of what your sales receipt would look like, right? So it shows you the payment method and it reflects, okay, your balance due would be nil because it's showing you the payment was made. Send and close. And then, so we've recorded this new income, right? So my sales have now gone up to $2,000. Yeah, my profit has increased. So under customers, we've basically done invoicing, sales receipt. I want us to do some expenses now. Yeah, so go under suppliers. I want to first tackle if you get a bill. So I think the bill I have under here is Jamaica Public Service. That's the energy company in Jamaica where we get our big light bills. So this one was pre-populated. So notice the category here. This is what I would choose from my chart of accounts. So utilities is what I would select. My description is electricity charges. I'm going to put October since we're in October. I'm going to leave the $15, which I know the Jamaicans in me here would be like, yeah, right, which $15? And you can put your terms to make it specific. Bill date, due date, you can put in your bill number, which is always very good if you want to search for a specific bill. And then you could attach here the bill. Just for argument's sake, I'm just going to attach something just as an example for you guys. So I would go into my stuff, my desktop, and we had been saving some stuff. I just use one of the things I was saving. Just pretend this is my JPS bill and, see my bill here, wonderfully attached to the document. And so, really neatly done. And then I can come here and select save and close or save and new if I wanted to do another one, but I'll do save and close. So I've recorded my bill, but now I want to record the payment of my bill. So I come up again to my plus new at the top under suppliers and you see it says pay bills. I select pay bills. And then under pay bills, it's going to show me all my unpaid bills. So on this list here, I have my payment account. So I'm going to actually pay using my People's Bank account. And so I would tick that it's this bill I'm paying. And, I could change the amount here. And yeah, if I click save and send, it actually will allow me to send a remittance advice, but we're just using our standard little email where we're sending everything to. This is something about unexpected failure. Anyhow. But yeah, so you can actually send a remittance advice. Not that we would be sending one to JPS anyhow. But if it's to somebody else that you're paying a bill, I'm sure they'd love to see, that the bill was paid with a little remittance advice that a payment was done. And then that would have affected my profit. My profit would have gone down. You see my expenses went up. All right, so I go to my new section now. So that was really an accrual method of accounting, where you would have had a timing difference between a bill and a payment. But let's say it's, I'm recording something like, buying a meal to eat, yeah, where there's no timing difference between getting the meal and paying. So in that case, I would just use expense rather than bill and pay bill. I just go to expense. So I go to expense. So I bought lunch today at this place, F&B, right? Stands for food and beverage downtown. I give them some free advertising here. So set up the payee, and let us say my payment method, I use my petty cash, right? I use cash to do it. Payment date was today, payment method, cash. And I want to put here that this was meals and entertainment, right? This is the category set up in my chart of accounts. So I'm going to say lunch at training location. All right, so 500 Jamaican dollars. I know the Trinidadians are like $500. And then I could attach here my receipt from my meal, right? So I'm just going to randomly click on something, pretend that that was a bill, and I would, have my receipt recorded within my transaction, which is so cool. And then, yeah, save and close. And so I've recorded that expense. So you notice what that did on that expense feature, it brought together the bill where you put in the details of the bill and the payment information at the same time, since they occurred at the same time. So I want to show you a report, right? So we recorded income, we recorded some expenses. So let's click on reports. I'm going to go to my profit and loss. So in my profit and loss now, I want to see what happened for this month. So I'll come to the top here. This month, I click run report. When I click run report, it's showing me, I had tax services income of $2,000. I had meal expense of $500, utility of $15, and it's showing me my net earnings. Yeah, but just so user friendly and easy to use. So that's your little run through of QuickBooks. I know we're supposed to take a break at 2:45. It's now 2:53. So I want to pause right here, but I'd love to take any questions before we break, since we have this QuickBooks stuff fresh in our mind.
Okay, so there are a few questions here. Let me get to them. So I don't understand what to do when someone pays me before I send their invoice.
Okay, that's a great question.
From Kamisha.
Yeah, so Kamisha, that's a good problem to have, right? But you can actually record. You remember how we had that feature to receive payment? You can actually hit receive payment and record that payment, even though there is no invoice. So for example, if you go to new, receive payment. So let us say I got a payment from Lisanne Charles. So notice it says, QuickBooks says, we'll save this payment as a credit to your customer since you don't have an open invoice. If you want to record this payment without an invoice, use a sales receipt. So it's telling me I could use a sales receipt, but I don't want to use a sales receipt because I plan to issue them an invoice. Yeah. So it will put it as a credit. So I can literally come in here and just put it. So it was a bank transfer. You got $250 and you can literally record it. And I just to save and close. So it says here, we'll save this as a credit to your customer since you didn't select an invoice. So save as a credit. So that is now sitting there in that customer's account. And I go to sales, I go to customers, I go to Lisanne Charles. Within Lisanne Charles' list of transactions, you'll see it says payment unapplied. Yeah. So it doesn't hurt you, and you could send them this receipt. You could click save and send, and you could send a receipt for that $500. And then when you eventually create an invoice, it would then, you can then apply it to the invoice. So you don't have to have an invoice to record a receipt.
Okay. All right, great. And she also wants to know if you can readily view the bill that you've attached.
Yeah, absolutely. Absolutely. So for argument's sake, let's just quickly look at one. So I'll go over to expenses. In expenses, let's click on F&B, and I'm opening it up. So down here is where my attachment is. I click on the attachment and it comes up. Of course, that's not the expense because I randomly selected it. But you see my Adobe thing populates. I could just open it in PDF or whatever. So the answer to your question is, yep, you can readily see it.
Okay, great. Another question here, this one from Adozico. Can expense management apps allow recording multiple expense categories appearing on one receipt?
Yes, absolutely. When you're on the actual transaction, you can click split, and in split, you can then put the amount and the separate category. Yeah, and you can do it for multiple transactions.
Okay, great. Another question from the same person. How are fluctuating exchange rates dealt with? For example, an invoice is sent 1 month to an overseas client, but the exchange rate has changed by the time the client pays.
Yeah, very good question. And that again is a reason why something like QuickBooks is great. So once you're in a multi-currency scenario, which is regular for us in the Caribbean, you would need to get at least the essentials version. So the cheapest QuickBooks is called Quick Start. That one doesn't have multi-currency. But the level up QuickBooks Essentials, so the quick start is 15 US a month. The level up Essentials is 23 US a month. That one has a multi-currency. And so what it will automatically do is when you record the invoice, you can put in an exchange rate at the invoice date. And when you record the payment, you can then put in the exchange rate at the payment date. And then the system now will automatically calculate if there's an exchange loss or an exchange gain, and that will come up on your profit and loss report, which I just love. It's perfect.
Okay,
so you definitely
great.
need a multi-currency accounting software.
Okay, another question. If an expense covers a year, for example, car insurance, how does QuickBooks record this in one payment? How does QuickBooks record that the one payment is applicable for a period of time?
Very good question. Now you're getting a little bit more complex in your accounting. From a layman's point of view, I would say just enter the expense at that one point. If you want to get fancy with your accounting, what you would do is that you would record the total expense as a prepaid expense, and then that prepaid expense you would offset it every month. So let's say the expense was 120,000 and you paid it in January and it applies to the whole year. Then each month you would reduce the prepayment by $10,000 and record that $10,000 as an expense. So each month you'd have an expense of 12,000 that you're staggering and reducing that receivable amount for prepayment would go down each month too. So you're getting complicated, but I would say from a layman's point of view, just record it one time. But no, QuickBooks doesn't automatically do that. That would require some journal entries, which is a good
Okay,
idea. They should have that feature.
okay, and final question here from Kamisha. Do you have to split the GCT on invoices?
All right, so this is I always try to make sure we clarify when we talk about invoices received, right? So when you issue an invoice to your customer, we call it an invoice, but when a supplier issues their invoice to you, from your perspective, that's a bill. So I figure you're talking about a bill you receive from a supplier. And yes, you actually need to record the GCT amount, you know, on your bill. So it's just that this training one that I have set up, you know, I didn't set up the whole GCT or, you know, value added tax for whatever it's called in other regions. But it would have a space on the bill that you would actually be able to enter what that value added tax amount is.
Okay, we have some questions in the chat. We can take those quickly.
Sure, sure.
Kamisha says you can also format the invoice more and add your logo, even create and upload a template into QuickBooks. So just a point there. And another point, or rather, this is a question: is there any software that does specific tasks, specifically receipt generation?
No, you know, it's best to kind of know what specific type of transaction is being done. So for example, if you are you know, a food business, you know, people come to you and they buy food from you. You know, you're a cafe, for example. If you're a cafe, I would recommend that you have a point of sale system. And so a point of sale system, you normally would outfit it with a receipt printer, just like when you would go to any of these, you know, quick service food spaces. And then what would happen is, you know, they would typically have some kind of point of sale interface that the cashier would use that would easily generate a receipt. And in cases like that, you'd have your accounting software separate from your point of sale software. And then you would basically just load your daily sales activity as a, you know, a batch entry into your accounting software. So if, you know, I'm not sure if that's what you're referring to in terms of, you know, a receipt generator like that, where you're dealing with many small transactions. I would say it's best to have a point of sale software that syncs in. You have some really inexpensive ones out there like Square apps. That's a great one to use, and you just get you know, you know, you can set it up with a tablet and a receipt printer, and you know, you can get an interface going.
Okay, so Lisette is asking a question here, and this has to do with the demonstration you did, but it said the balance due was 0, right? When it should still be 505. Is that correct?
Oh,
But if you
you
would
know, no
remember
man,
what was done there.
I remember that transaction she's referring to. I think that was it was speaking specifically to the receipt. So you know what, let me do this quickly to answer that question. So if I would go on the actual transaction, so let's go to Jackie Pasley, and let's look at the bill I did. So the bill I did was for $1,000, right? So let's click on that. Sorry, I shouldn't say bill I did. Invoice I did. You get my terms right. Come on, QuickBooks, what you doing? Refresh. All right, so here we are. So if you look to the bottom right, it shows you the total amount received, balance due. If I generated this invoice again, you will see it shows payment $495, balance due $505. Yeah, so it's there. It's there. Ready again for another question?
Yes, so just a thank you there from Leslie and
Listen.
yes, for the explanation there. Let me continue here. Okay, I think we can take a break now. We can come back to the questions after the break.
All right, no problem.
Do you put reference numbers in the description column for journal entries?
And I would say yes. I mean, the idea is really just to put, have some sequence. So you know if it's number 100 versus number one. But QuickBooks would automatically generate a new number every time a new journal is done. So it kind of automates that step.
Okay, and the other two questions that I hear is in relation to something you'd already covered in the chat, which speaks to receipt generator for persons utilizing a space. So that was already addressed.
Right.
So those will be the questions that we have for now.
All righty. So let's keep going because we're supposed to end the presentation at 4, so I don't have much time left. So I'm going to share my screen again. All right, perfect. So yeah, so we've looked at QuickBooks. I just wanted to give you a quick exposure to the cloud software that I use, which is Google Drive. So I created this little email. So this email, I created it specifically for training purposes. So this is, on the Google platform, and you would notice that all of these emails here that came in, invoice, payment receipt, estimate, sales receipt, remittance advice, all of these are what we generated as a result of the transactions that we posted in QuickBooks, yeah, because I would have sent them via email. So this is how it comes up, in someone's email, which is just, which is excellent. So really, really like, just how clean that is, that you can just go straight from posting into communicating that accounting documentation. Now, remember how I was telling you, I recommend setting up an email specifically for your, to manage your, the gathering of the primary documents related to your financial transactions, right? Step one was gathering. As I said, when you have the email, one of the things that you can do now is that you can actually begin to label your emails. So I'm here and I'm selecting my emails. At the top here, there's a labels button. Click labels, and then I want to, remember I tell you I normally organize my stuff by year and month. So I'm going to create a label for 2020, 10 October. I like to use numbers in reference to my months so that the system can automatically organize it in an order. So here it is. I create this label 2020 10 October. So as you can see now, those labels have been created, right? And it was cool. To the left here, you see my label. I can give my October stuff a color. So I want to give it this nice teal color here. So you see, I have this wonderful label. Now, if I want to make I could, just generically, let's say all of these related to one supplier that was sending me something. So just ignore what those emails actually are. And let's say I wanted to say all of these were from Kingston Creative. And I want to create that as a label. So I can have multiple labels. I want to give them this nice orange color. So you see that just really organizes my email. And then if I'm ever searching, I can put in Kingston Creative. You see the label comes up and it would just show me, the stuff related to Kingston Creative. Or I could just come to the side here and click it. So it just really helps with organizing your information. Then the other thing I love now, moving from email into cloud storage. In the email itself, at the bottom, you'd have the attachment of the invoice, yeah? So when I hover over it, it gives me the option with this down arrow to download, or I can add it to my Google Drive. So I'm going to click Add to Drive. When I click that, you see it says, you know, it gives me the option to organize. I click Organize. And then when I click Organize now, I'm able here to create a new folder. So as I said, I like to put my stuff in, you know, year. So here's my 2020 folder, but I want to go even deeper. I want to create an October. So I'm going to call this 10-OCT for October. And so I've created my October folder, then I click Move here. And so now you see it here, my invoice is now within that folder. To access the drive when you're in the email, to the top right hand here, to this grid, click the grid. You see the options here, click on Drive. Then I'm within my drive. You can see within here now, you say I have my folders, 2020, October, and here I have my stuff. So if I want to upload other things in here, I go to New. I can create a new folder, or I can do a file upload. So I click on File Upload, and then I can actually find, because remember I had stored some stuff. So here's some stuff I want to upload. So I uploaded these two files. And so here they are in my cloud, right? So these things are now stored in my cloud and they're organized. So just showing you that as you know, as an option for a storage device, you know, cloud storage device that links directly with the email, you know, which satisfies, you know, the gathering and the organizing steps within the bookkeeping process, as was mentioned. All right, so switching gears now, going back to the presentation. Let me come out of this. All right, so we're in the presentation now. So looking at systems. So two systems I want to take you through quickly is the petty cash system and the double entry system. So, you know, before, one of the hacks I had mentioned in bookkeeping was avoiding cash, right? However, in some instances, using cash is just inevitable. It's, you know, you just can't get away from it. So there is a system in relation to how you should actually use that cash. And we call it the petty cash system. So I just want to share some principles that you can use in setting up a good petty cash system. So the first thing you need to consider is your funding. Now, you know, you definitely don't want to keep too much cash on hand, because that then becomes a security risk, right? But then you don't want to have too little, you know, so, you know, every minute you're running out of cash in terms of what your cash needs are. So a good thing to do is to, you know, basically, you know, give some consideration to how much cash you would typically need and how frequently you'd plan to replenish your petty cash. So maybe you decide, you know, I'll replenish my petty cash every 2 weeks. So, you know, you set a budget and then, you know, you decide, okay, this is the amount of money and it's supposed to last me for 2 weeks. So that's in relation to your funding. Now, security of your petty cash. I'd recommend getting, you know, going to the pharmacy or one of those places and getting a petty cash box with a key, so you can, you know, keep your money safe. Vouchers. Now, again, in a pharmacy or any stationery store, they would sell, you know, petty cash vouchers. And essentially, the principle here is, you know, every time you take cash out of the petty cash box, it needs to be replaced by a voucher. So cash never comes out without a voucher going in. And the idea is, you know, on the next step where we're doing reconciliation, that at any point in time, you should be able to add the cash in the box and the vouchers in the box, and it should add up to the funding amount. Yeah. So that is really the reconciliation that needs to take place. A part of the reconciliation step as well is essentially to create a petty cash report. And with a petty cash report, you just type it like in a spreadsheet, you know, what all the transactions are, and what the amounts of those are and the date. And you'd have a money spent column and a money received column. So you can show the money coming in and you show the money going out, and then you'd have a running balance. So at any point in time, you can see, you know, what is the amount that should actually be in the petty cash box. Moving on to replenishment. So when you're replenishing your petty cash, what you want to do is that you want to bring it back to the decided fund amount. So let's say your funding amount was $1,000 and you spent $700. When replenishing, you don't replenish it with 1,000, you replenish it with 700 to bring it back to the $1,000 amount. So you're always replenishing back to your decided funding budget. And then the recording of transactions. So this is where now you have your report that you would have produced when you're doing your reconciliation. And then, you know, that's what would inform you now posting those transactions into the accounting software. Method of funding. Basically, you know, you should really not be funding your petty cash from many different sources. That's how it gets confusing. If you've decided that for you, it's going to be an ATM withdrawal. So on your bank statement, when you look at it, you know, you can see, okay, I see an ATM withdrawal. This is in relation to my petty cash. For some people, they like to write checks and get those checks cashed. So it's just really determining on a methodology and trying to stick to it as much as possible, rather than funding it in many different inconsistent ways. So that's just some principles related to petty cash management. All right, double entry system. So this is the part that a lot of people tend not to like about accounting. You know, this whole matter of debit and credit. But this is really based on the accounting equation, which is assets equal liabilities plus equity. That's the foundation of accounting. Accounting is built around that equation. And you know, by assets, we mean the resources owned by the entity. By liability, we mean the amount owing to persons in relation to the supply of that assets. So liabilities is who you owe, right? And your equity now is the resources supplied by the owners of the business or the investors in the business. So if you kind of step back and consider what the equation is all about. The equation is showing you, on one side, what the business owns, and the other side, it's showing you how the entity managed to finance what it owns. Was it financed by debt, which is your liability, or was it financed by equity, which is the investment made in it? All right, so these are, how this accounting equation, is outworked in practical accounting. So assets are on the debit side, and then liabilities and equity are on the credit side. So by that I mean, when it is that your resources have increased, then it would have increased on the debit side for assets. If your liabilities have increased, it would increase on the credit side for liabilities. When your equity has increased, So equity here is synonymous with capital and reserves. It increases on the credit side. So in other words, liabilities and equity move in the same direction, and assets move in the opposite direction. Now, what often confuses people a little bit, you'd notice on this sheet, in addition to assets, liabilities, and equity, you're also seeing expenses and income. Now, you will notice that the expenses behave like the assets, and the income behaves like the equity and the liabilities. And a lot of people are confused by that. Like, how come it is that income doesn't behave like assets and expenses don't behave like liabilities? Let me explain. So what happens is that your equity moves, or I should say your equity increases when a business has earned a profit. Your equity decreases when a business makes a loss. So if you think through that, a company's profit increases when its revenues increase, and a company's loss increases when its expenses increase. So if the revenue increases and the profit increases, then the equity increases. So that is why income or revenue moves in line with equity. Yeah. And similarly, if the expenses increase, the profit decreases and the equity decreases. So you see, expenses and equity move in opposite directions. I hope that clarifies it for you. So this is basically saying the same thing as the previous slide, but just as a helpful snapshot for when you get this recording, you can pull it back. So let's look at assets in a little bit more detail. So here we have property and equipment, which would be land, building, machinery, furniture, vehicles, computers, and that would be a non-current asset, meaning these are assets that you are likely to hold for longer than a 12-month period. Then you have cash and bank, right? So that's actual cash that you have in your hand, like your petty cash or your cash in the bank. That would be that would be a current asset because it's more than likely you'll utilize that within 12 months. And then you have investments, which is stocks, bonds, and other financial instruments. And typically investments are treated as non-current. You tend to hold those for longer than 12 months. And then you have accounts receivable. That's money owed to your business by your customers, which would be current assets, meaning that you're likely to have collected that money within a 12-month period. And then inventory. That's all of the products that your business has in stock. Again, you tend to use inventory within a 12-month period. So that's a current asset. Liabilities now, those are loans, accounts payables, advance payments, loans, money that you borrowed. You have current and non-current loans. Some of it, may be due within a 12-month period, which would be the current part, and others, would be the non-current part. Accounts payable, that's money owed to the suppliers or other parties. Again, that likely would be settled within a 12-month period, and so that would be a current liability. Advance payments, money paid by customers but not yet earned by the business. That there would be a current liability because it's more than likely, the business would earn that money in short order. Equity. So equity would include an owner investment, share capital, or retained earnings. Now, retained earnings would refer to, as I mentioned earlier, if the entity made a profit or a loss for the period. If the entity made a profit, the retained earnings would increase. If the entity made a loss, the retained earnings would decrease. So income and expenses, just showing you, you know, based on what we had looked at earlier, just a movement of income and expenses in relation to debit and credit. And so here we have income. Types of income are sales, which speaks for itself, you know, money earned from, you know, sale of products or services. Interest income, that would be money earned from investments. And other income, that's money earned not related to your primary business. For example, you're in the business of selling craft products, but at the same time, you have a little excess space in the facility, and so you sublet it and you collect that income. That would be other income because your primary business is selling these craft items. Expenses. So you have their cost of goods sold, also known as direct expenses, you know, interchangeable terms. The idea there is that this is the cost of acquiring or manufacturing the products the company sells, or, you know, in some cases it would be, you know, the direct expenses related to, you know, the execution of the business. So this is distinguishable now from administrative and operating expenses. Now, admin and OpEx are, you know, just the ongoing expenses that can't be directly linked to each product sold, right? So that's stuff like your, you know, your rent, your stationery, you know, general admin expenses. Then you have your finance costs. So that's the cost of borrowing money. If you have a loan and you have to pay interest, so that's also known as your interest expense. And then of course there's tax, you know, compulsory contribution to government. So that's just to give you an idea. And we're going to wrap up looking at the whole matter of financial reporting. All right, so these are like the 4 primary statements, you know, when you're dealing with, you know, financial reporting. It's a balance sheet, a profit and loss statement, a cash flow statement, and the statement of changes in equity. Now I'm going to switch my screen a little because I want us to look at a set of financials while we go through this. All right, perfect. All right, so we're seeing that financial statement there. You can just put yes in the chat, so I know you're tracking with me.
Yes, it is on the screen.
Perfect, perfect.
And I'm
Okay.
seeing a response, yes. Okay, response.
All right, good stuff, good stuff. All right, so basically this is a balance sheet, yeah, and this is just a sample that I generated for training purposes, XYZ Limited, yeah. So as discussed earlier, remember I was showing you how there are different types of assets. There are non-current assets and there are current assets. So the balance sheet outlines, first of all, the assets. So the balance sheet is the clearest indication of the accounting equation, right? Assets equal liabilities plus equity. So here we see the assets outlined. Non-current, property and equipment, current, current with those that you would liquidate within a 12-month period. So you'd likely use your cash, inventory, accounts receivable. So your total assets here are 19.7 million estimated. Now we'll go down to the other section. So you notice assets are grouped by itself, and then equity and liabilities are grouped together. So the total equity and liabilities is 19.7, and the total assets are 19.7. So you see that's the accounting equation at work, right? So the assets are what the entity owns, and the equity and the liability is showing you how it's financed. So the equity part would be the share capital and the retained earnings on the capital and reserves. So that comes up to 2.4 million. The liability part comes up, you see the non-current part is 16.5 and the current part is 875. So if you add the non-current liability and the current liability, you're looking at about 17.3 million. So based on this balance sheet, it shows you how the entity is financed. It's heavily debt financed, meaning the resources that are owned are mainly financed through debt, through borrowing. Only a little bit of it was financed through equity, the actual investment by the owners. So this company is what you'd refer to as highly leveraged, right? A whole lot of debt, which is very risky. So what else can we learn from a balance sheet? We also can tell the entity's ability to meet its short-term obligations. So we'd look at its current liabilities. So they need to pay suppliers, that's accounts payable, and they need to pay a credit card, totaling 750,000, and they have some other payables too, which is likely stuff maybe like payroll taxes. So they need to pay 875,000 in a short period of time. So you would look at their current assets. So this is basically the money they have readily available to some degree, and that would be 4.8 million, right? That they would, and that's approximate. So when you look at their current assets of 4.8 million versus their current liabilities of 875,000, you'd see that they're more than able to cover their present obligations. Yeah, so they should not have a cash issue. The other thing that you can see from a balance sheet is you can just get an idea of the book value of the business. So you want to know what is a business really worth at a snapshot, you can look at the equity. Yeah, because essentially at the end of the day, this is how much the business is worth to the owners. $2.4 million, because that is when you take all of what they own less all of what they owe, they would be left with 2.4 million. So that's like a very basic way to value a company. There are far more complicated ways of doing it, like looking at, their estimated future cash flow, of what they will be able to earn into the future. But if you want to get a crude, very basic value, that's a method of doing it. All right. So moving along now to the profit and loss statement. So the profit and loss statement shows us our income / revenue. Those are synonymous terms. Or direct costs, which, earlier you saw it as cost of goods sold. And that's like the direct costs of having to manufacture or deliver a service, And then you would be able to see your gross profit. So your gross profit is the income from what you sell, less this direct cost. And so this is the profit you earn before any of your administrative and operating expenses come out of your business. So at this point, if this is too low, then you need to be concerned, because you have a lot of expenses that need to come out after this gross profit amount. So this may be an indication that if it's too low, that it's costing you too much money to deliver your product, to manufacture your product. Or it could mean that the price that you're selling your product at is too low. You may need to increase your selling price. So that's what the gross profit gives you an indication of. Now we get to our operating expenses. So when you take out your operating expenses, that would be like your rent, your utilities, your printing costs. If you have administrative staff, all of that comes under your operating costs. And then now you would come to your operating profit. Now, if at this point you don't have a profit, then your business is in trouble, right? Because you still have more expenses that need to come out. Okay, you need to cover your interest payments, and you need to be able to pay some taxes. Well, if you make a loss, you don't have any tax to pay. But in the case of this company, they definitely need to have a significant operating profit, because remember, they have a lot of debt, and so they're going to have some high interest expenses. Yeah. So moving on to finance costs. So your finance cost, as I said before, is your interest expense. And you see that they can comfortably pay their interest expense. So that means, they're really, not doing badly at all, because they actually have some profit after their interest expense. So the fact that this business is generating profit after all of those expenses means that, they are a well-structured business that is being run efficiently. So no concerns in how this business is operating. So moving on now to your cash flow statement, or your statement of cash flows. So what this really tells you is the movement in cash and bank balances over a period. So it's just telling you, what's happening with the cash in a business. Because remember, especially like right now when we're in a pandemic, people are selling, operating, but a lot of the time people are not collecting, so, if your business is doing a sale, but you're not able to collect the cash on the sale, that's not a healthy business at all. So that's why the cash flow statement exists, so that you can look at the cash movement within a business. So it starts with the profit for the year, and then it makes adjustments for things like depreciation. So depreciation is the amount by which the assets of the company are devalued each year. And that's just an approximated calculation based on percentages, that are standardized, to the respective industries. Because as you know, if you own a motor vehicle, it depreciates in value every day. Yeah. And that's similar with machinery in businesses. Anything you own, really. The only thing that doesn't depreciate is land. Land increases in value, but the house on the land depreciates. So it's really a non-cash transaction, because it's not like cash comes out of your business with depreciation. So that's why we're adding it back here. Income tax, it's standard that you add that back, because sometimes you don't necessarily pay out the tax. You may pay it out in the future, so we tend to add that back. Interest expense, similarly, you don't necessarily pay out the interest, so that's why you see a little later, you'll see it actually shows you the interest paid and the tax paid to track the cash there. So anyway, it adjusts this profit upward to remove those non-cash transactions. And then it looks at the cash movement between accounts payable, other payables, inventories, accounts receivables. So all of these relates to, the current assets and the current liabilities and the movement between those balances. And essentially, and then of course the interest paid, etc. And then you see here, it says net cash provided or used by operating activities. So the fact that this number is in the positive, it means that through the operation of the business, the operating activities, this business actually generated cash, positive cash of 400,000. So that's good. So again, as I said, this business is operating well. Then we move into now the cash flows from investing activities. Nothing happened here during this year. Last year, they did a major investment of 17 million in property, plant, and equipment, but this year they did nothing. So, so they didn't use up any cash in investments this year. Cash flow from financing activities. Last year was when they got a big loan of $14 million. So you see that would have brought 14 million into the business last year. So this year really, their cash moved from 1.9 million from the previous year to 2.3. So their cash position improved, from last year to this year. And then the last statement we'll look at is a statement of changes in equity. Now, this is telling you how your equity moved. Remember, I was telling you the equity is what the owners have invested in the business, and it would also, which would be based on the share capital of $1 million, and it would also be based on the retained earnings, and the retained earnings would relate to the profit generated for the year. So we want to look at the current year. So we're looking at the one at the bottom. So, the top part would be the year before for 2018, but we're looking at the year ending 2019. So nothing changed with the share capital. So they didn't invest any more money in the business. However, they generated a profit of $1.1 million. So their retained earnings position went from 250 to 1.4 million. So their equity was strengthened. And that was as a result of the business generating more profits during the year. So this is a very healthy company. Now, if it is that the owners had decided to pay themselves some dividends, meaning, after they've calculated the profit, instead of, putting all of the profit back into the business, they decide that they want to actually, disperse some of the profit, among themselves as owners, that would have gone out as dividends. And then that dividend amount would have reduced the retained earnings. But there was no dividends this year. So that is our financial statements. And let me just share my final slide, and take any questions. We're at the end of our presentation. So thank you, first of all, for your keen attention. I've put my contact information there if there's anything you want to take offline, or if you need any of my services. And you can follow me on Instagram at gmaccounting.co.
Okay, great, Gary. Thank you very much for that very informative presentation. I'm sure, based on the comments in the chat and in Q&A, that persons have in fact learned something new this afternoon. At this point, if there are no questions, because I'm actually not seeing any new questions in the chat or in Q&A, I'll give another minute or so. Persons who want to share to do so. And while we wait, what I will do is I will add the two links that I spoke about earlier. The link to access the feedback form, which we are asking you to complete. We value your feedback. It's very important to us. And so we would appreciate your completing this form. Additionally, the the form or the link to access the quiz, it will also be placed in the chat. I've just placed them there for all to see. Hoping you are seeing them now. I'm going to ask you to complete those at this point. So both forms, the feedback form and the form to access the quiz, we ask that you complete those. While we do that, I'm seeing a message here from Marcia. Thank you very much. Increased my understanding of the importance of accounting to any business. We appreciate that comment. Marcia and Claudia has a question. How do you do your monthly stock taking?
Okay.
She's not too sure how to do that.
Okay. And you're welcome, Marcia. Thanks for your attention. So for Claudia, so first of all, you need an inventory list that lists every single item that you have in inventory, in particular detail in your description. And then you'd have a column where you would put, your quantity, so you can know, how much of each you have physically counted. And then from there, from doing your physical count, you would then, assign a value, to each unit, and then generate a cost amount of that inventory. And from there, that would tell you, okay, this is what your present inventory is worth. No, you would need to look at what you have in stock. Sorry, what would be on your system already, if it is that you've been, recording your inventory on your system and comparing it to what you have in stock. And then that difference between the two, you would call that your cost of sales. Reducing your inventory amount by what is currently, in stock. I mean, I'm assuming the inventory would have gone down for sale, but I think that I might be, making it a little too simplified for you. So that may be bookkeeping 202 as well. We might be able to get into the details of that. But I would say that's a start, to create the inventory list, have your unit costs, and your quantities, and then develop a valuation. That would be the first step. But yeah, maybe you can probably send me an email or something, then we can, keep the dialogue going.
Okay, all right, great. And Lisanne wants to know how many hours should you dedicate per week or per month towards financial accounting?
Yeah, I mean, truth be told, it really is dependent on, um, the extent of the transactions you're doing. For some people, they don't have transaction heavy businesses. Maybe they do, 5 invoices a week, um, so it takes them no time at all to do it. Some people, based on what they're doing, it's a lot more intensive, so they may need to be doing a little bit every day. So I would say, you know one of the things that is critical in bookkeeping is doing it in a timely way, because if you wait too long, you may forget, what happened. So it affects your ability to record the information accurately. So I would say weekly is good. If you're busy, just spend a little time on the weekend to update your records. But if you have if you really are transaction heavy, you might need to do a little every day. But again, it's a rhythm, because I would say, when you make it a part of your lifestyle. So when you are, providing a service or delivering a product, just do your invoice at the same time, um, and then, if you're using an expense management software, as you get a receipt, you just take a picture right away. So I would say, it's best to use software to your advantage and just record the things right away. If somebody sends you a note and say, hey, I've paid you, I sent you a bank transfer, then don't wait. Just check your bank account and record a receipt and send it to them right away. So I think the more you do it in real time, is the better it is for you.
Okay. All right, great. I'm not seeing any more questions here. So we'll allow persons a few minutes to complete the form. While you do, I did promise earlier that I would share some of the other very exciting and interesting courses that we have in the Digital Creative Training Program. Of course, you know, today we covered managing your money. We also have sessions in digital marketing for creatives, social media management for creatives, protecting and benefiting from your intellectual property, project management for creatives, and e-commerce and online sales. So if you haven't already signed up for one of these courses, I want to encourage you to go over to our website and to sign up today. We still have a few seats left. All right. I see Claudia or Joan rather asking for the forms. It's actually a link, Joan, which I dropped in the chat, but I will share it again. So there are two links. One for the feedback on this training, and the second link is to access the quiz that we're asking you to complete.
I hope after this, everybody's going to become excellent bookkeepers, gathering and organizing and analyzing and posting and finally reporting your transactions.
And you know what, Gary, that's a very good point, because one of the key things with doing these sessions, it's not just gathering or getting the information, but being able to apply
To utilize
what
it.
you have learned. So we
Mm-hmm.
do hope that person will be able to put into practice what was shared this afternoon.
Mm-hmm. Yeah, and then the truth is, you know, what happens with some people, as I say, with people I work with, is they may say, okay, they will gather the information, they'll organize it, but then they hand it over to somebody else to actually do the posting for them.
Right,
And then they can then, you know, once they have the software and somebody has posted everything for them, then, or what people will do is that people will post their own invoices and record their own receipts, but they don't
yes,
bother with the expense side. They just, you know, they provide that information to someone else, and then you know, that person handles all of the expense for them, and then they can generate their reports once, you know, a qualified person posts a thing properly for them.
right.
So that's an option too, you know, so you could do part of the process and outsource another part. um, so
Great.
that's yeah, so it's important, I mean, for all the reasons mentioned before. So I would encourage everyone to, you know, even if you haven't formally registered your business, you know, start with a free software, start with Wave apps, and really you're developing that good habit of, you know, of bookkeeping, and as you grow, you can then, you know, put better systems in place, but at least you start basic and then develop it.
Yes, yes. Very good point.